Patrick Findaro here, co-founder at Vetted Biz. Very excited to have on Alex Smereczniak of LaundroLabs. He's the co-founder of LaundroLabs based in Charlotte, North Carolina. They're about to cross the 100 mark in terms of franchisee commitments, which is pretty cool, right at 99. Very successful corporate location, a few units already up and operating. Alex, tell me a little bit about your background, how you got in the laundromat space, and what kept you in that industry vertical.
Yeah, well, first off, thanks for having me on and letting us share our story and how in the world we got into the crazy industry of laundry. So for me, it started in college. I went to Wake Forest here in North Carolina and worked for and eventually bought a student-run laundry business on campus called Wake Wash. So that's how I first got my taste of entrepreneurship, laundry as a business, et cetera. Sold that business and then moved to Charlotte to do consulting for 2 years. Thought it would be entrepreneurial. For the most part, it was, but I just had the entrepreneurial itch at that point. Knew I wanted to get back into business building, and it happened to be laundry again. And started with a pickup and delivery business called 2U Laundry, which was tech enabled, door to door laundry and dry cleaning, pickup and delivery in January of 16. And throughout the last 7 years or so, have just really iterated on our model and eventually launched a franchised concept called LaundroLab, which is an elevated laundromat experience. Think your Chick-fil-A of laundry and laundromat. So really providing this 10-star experience for our customers: free Wi-Fi, children's play areas, mobile applications to pay, check the status of your orders, et cetera. And just launched that a year ago, and as you mentioned, are at the 99 mark. And hopefully by the time people hear this recording, we're well over 100. But having a blast building it and well on our way.
Well, yeah, this is November 2022. It'll probably be released next month in December. So I'm sure by 2023, you'll cross that 100 mark. What did your parents think about you going into entrepreneurship after just 2 years? Like, I worked at JP Morgan for a couple of years out of college, and I wanted to try to do my thing. I got some resistance from my parents to maybe work at a smaller company, which I did. And then I launched a company 6 years out of graduation. But 2 years is impressive. What did your parents think and your peers?
Yeah, so I think I got to warm them up a little bit to it with the college, safer, smaller scale college laundry business. I put every dollar I'd saved into that, which they initially thought it was a little crazy doing that. And then I think they saw the success. They saw how much we were learning, how much it was helping us develop. All this good that came out of it. And so I think that was a precursor for them. My dad was a financial advisor for AXA Equitable. And so in a way was an entrepreneur. He 100% commission, ate what he killed, type of career. And so I think he was more comfortable with risk than a lot of parents probably would be. But admittedly, when we started 2U, 2 years into our careers, my parents were kind of hey, it's we spent all this money for you to go to this great university, and you got a job at a Big Four consultancy, and are you sure you want to quit that job to go start a laundry business? And so a little hesitant at first, but then eventually got comfortable with the idea of it.
Very cool. And how did you decide to pursue raising capital instead of just bootstrapping the operations?
Yeah, so when we first started, we bootstrapped the first year to about 80,000 in monthly revenue. And at that point thought, hey, there's something here, there's something going on. And me and my co-founder had pretty intensive conversations throughout around, do we want to be the laundry guys for the next 30 years and be meticulous and very, very thoughtful about how we build this because there's less room for error? Or do we believe that this is not a winner take all, but a top 2 or 3 winners take all, and there's a big consolidation play here, and if we wait, do we lose out on that and be one of the smaller players that get acquired, or is there a real chance for us to go be like a Ship, Instacart, Uber, Lyft, et cetera, where there's 2 or 3 dominant players that are in the market? And we were more of the mindset of let's go raise the capital, let's get bigger, quicker, and have that ability to take more outsized risk, just knowing how capitally intensive this business can be with trucks, vans, washers, dryers, et cetera, and needing to get to scale quickly.
And I'd imagine it's professionalized, the franchise model, the financials of your franchisees, at least the top line revenue, where there's a lot of industries in the United States, nail salons, laundromats, where people are operating on cash and not paying taxes. And Biden's made it very clear IRS is going after small businesses. And for those that are not operating legitimately, whether it's employment law or flat out cheating on your taxes, there's going to be a lot of pressure in 2023. So I could see that being a net positive for you guys doing it by the book and making sure that the franchisor, franchisee, and everyone's doing it 100% compliant and paying their taxes, having their employees properly registered.
Yeah, absolutely. And I think, part of the reason we're attracting the folks that we are is because of the brand, the technology that we've built out. There's bonus depreciation. So as much as there's, doing it by the books and paying taxes, et cetera, there's also this section, I think it's 183, 179. I can't remember the exact section, but they can do the bonus depreciation and, write off $800,000 to $1 million worth of equipment, whether it's all in 1 year or over the course.
That can be significant. If you're earning $250,000, $500K, that's a lot of tax savings.
Exactly. So we get a lot of pretty sophisticated investors and franchisees that get attracted to what we're doing, and that's in part one of the big reasons they love what we're doing, and because of the equipment and the ability to use it as a tax shelter.
And how is like a typical location set up? Like, you have the franchisee who ideally is going to open up a few locations, and then does each laundromat have a general manager, or what's kind of like the ideal structure in terms of the employee chart?
Yeah, so one of the things that I think the reason you haven't seen a nationally recognized laundromat brand is because there's over multiple markets, there's diseconomies of scale. It's it's equipment and real estate. It's not inventory, burgers, fries, where you get bulk purchasing power from a McDonald's or a Five Guys or whatever brand it may be. But there are local economies of scale where if you as a franchisee own 5 in Charlotte, you can hire one general manager to manage all 5 stores because it's not inventory intensive, it's not labor intensive. And so, we're seeing a lot of people buying 4 or 5 plus, but dominating one market versus owning 20 of them across 6 markets.
Yeah.
And so the model, really is, if you can get 4 to 5 stores open, one general manager managing all 5 of those stores, it's a relatively low labor model that has there's a strong, consistent customer base that this is non-discretionary spend for. And then we have this pickup and delivery component that we offer right now. It's not required. It's an add-on, and 90% of our franchisees are coming on because they want it. But we run a pickup and delivery business called 2U Laundry. Think of it as your Instacart, DoorDash, Postmates, et cetera, equivalent of what those businesses are to any fast casual restaurant or quick service restaurant. Where 2U, we manage the employees, the customer acquisition, the customer care, the drivers, the vehicles, all that's us corporately doing that. We then go bring that volume to Patrick's LaundroLab and say, hey, we'll bring you another 300 to 500K a year of additional revenue. All you need to do is clean it, and there's no additional startup costs for that. You're using the same assets and team and equipment that you already have. It's more so, do you want to add a few more variable roles and labor to the team to process, to wash it, dry it, and fold it? But again, it brings in another $500,000 in revenue.
How about like on the B2B side, whether it's gyms or other type of businesses that might need laundry service?
Yep. So we facilitate a lot of that as well too. Yoga studios, salons, gyms, dental offices, et cetera. We'll go facilitate all the pickup and delivery for that, so that you, again, as a franchisee, can focus on, hey, how do I build an incredibly tight, high quality 4-wall operation and not have to think about customer acquisition, customer support, vehicle maintenance, hiring, firing, managing drivers, et cetera. There's already enough to bite off and chew on within the 4 walls. And that's what we've learned ourselves, vertically integrating the whole thing, managing all 3 or 4 of those components. We've just learned that it's a lot, at scale to try to manage. And so let's, make sure that every group can focus adequately on their piece.
So the franchisee essentially is focused on hiring, training, firing, and making sure the operations within the laundromat are going well. Yep.
And then we are basically a demand aggregator. Think of us as what, again, Postmates, DoorDash does to McDonald's, Taco Bell. It ends up being 30, in some cases 40% of that location's revenue. But all that operator had to do is, and their team had to do is make more burgers, make more fries. It wasn't go out and
Yeah.
build an app, hire drivers, buy vehicles, manage vehicles. It was just keep doing what you're really good at, and we'll bring you the volume.
And what's the revenue split, or is it like a range for the pickup and delivery that they're going to be processing?
Yeah, so the way we set it up is we wanted our franchise partners to be just as incentivized and motivated to clean a bag of laundry that we dropped off as someone who walked in off the street and dropped it off. So
Yeah.
in laundromats today, majority of the revenue, 90% plus, is self-service. People coming in, putting quarters in, or using some sort of app to pay for the washers and dryers.
The card.
The other 10% is drop off, wash, dry, fold. It's people that don't want to do it themselves. They'll drive in, they'll drop it off, and you charge them anywhere from $1 to $1.50 per pound. So we pay our franchise partners that same $1 to $1.50 per pound to clean every pound of laundry that we bring them. Again, so we want them and their teams to be just as motivated to clean a bag from us versus a bag off the street, so that the economics make sense for them, or just as exciting, enticing, versus us going and saying, hey, we're bringing you thousands of pounds a day. You need to give us a 30% discount and
squeezing them.
Them, right? And so we ask for a little bit of a discount. Like, we need to make sure that we're covering the cost of pickup delivery, but we're fine running to you at a thinner margin, because ultimately we own the franchise business as well. And we want everyone to be successful in a
Yeah, you'll get the royalty back. What do you guys charge for the royalty for LaundroLab?
6%.
Okay, nice. So yeah, to you could be running at a thin margin, but you're pumping a lot more volume at the franchisee level.
Correct.
And then you get it from there.
Exactly. And so that's our way of, again, we need everyone to be aligned. And so if we need to be thinner margin on 2U, we make up for it in other areas.
And then, so from what I understand, like a typical laundromat, they're largely catering to someone that's lower class, lower middle class. But it seems like for a LaundroLab, you have that base that's coming to the laundromat, and then you also have the upper middle class that they're doing pickup and delivery, and then you also have gyms and the kind of the B2B clients.
Yeah, so we really get to the beauty, I think, of the model, and of course I'm biased, is that we get to use one asset base to clean a whole spectrum of different customer bases. You get the lower end, lower income demographic that doesn't have their own washer and dryer. We build this beautiful experience for them. Kids play area, again, amenities, Wi-Fi, so that they take pride in going to this place that typically they go to and they feel unsafe, scared, less than, and now they get to go to this place where it's, hey, this is mine, this was built for me, I take pride in it, I'm going to take care of it like I would my own home. So you get to service that group, but then you also have this crazy busy family that has the disposable income. Both parents are working, they just want time back. You just take that same, that customer and bring their volume into the same place that other group is coming into, and you really it creates all sort of diversification within the business of, hey, if there's a bad economy takes a turn, you've got this group to that's really going to increase in spend and time and volume. And if things are great across the board, you got both groups coming in. And so it really adds, you're not single threaded and reliant on one customer base. And so we've seen it happen through COVID. We've seen it happen even now as things are starting to enter into a recession. Both balance each other out incredibly well.
And if you're, say you're investing over $1 million to open up a LaundroLab, or $5 million opening up 5 and kind of totally conquer an area, if it wasn't inherited, your time is probably pretty valuable. So you could be the one grinding and trying to get relationships with the gyms and the yoga studios to get that incremental revenue. But your time is probably best spent doing other things, whether it's developing a second LaundroLab, or you have other business endeavors. So I like that model, and talking to some independent laundromat owners that are high income earners and they have a lot of different things going on. That one in particular has told me, like, I can go and really hit the B2B market, but it's going to take a lot of time building relationships, and it's just better that I do other things. So that laundromat's probably at like 600K, 700K, and isn't really breaking out, can't get that much higher, because the time of the owner or the key employee is just not worth it doing that extra work.
Right. And that's where I think too, and we haven't experienced it exactly yet because we don't have, regional or national scale yet. But in franchising, as I mean, it becomes a pretty, small world, and we're already talking to the, Perspires of the world that are these, sauna concepts, and we're talking to other gym franchise concepts, and they're all asking us, when are you going to be in these cities and these cities? Because right now we're spending $2,000 a month on laundry, and I have my staff doing it. It's a waste of time, and we're buying washers and dryers, and it was part of this business that we didn't mean to get into, but it was a necessity. We need towels. And so I think
Yeah.
the bigger we get and the more locations we have, we're going to be able to start going to and having national account agreements with Perspires and Orange Theories and what have you to help facilitate their laundry needs.
That makes sense. Serious business development efforts where for a franchisee, it doesn't make sense like spending 1 to 2 years on like a national account if you're just going to be able to benefit in that local market.
Right.
And tell me a little bit about the equipment costs. Are there discounts passed on to the franchisees? Do they get it at the wholesale rate? How does that work for that million plus investment to open up a LaundroLab?
Yeah, so a majority of that total initial investment is equipment. There's a good bit of improvements, but the lion's share is equipment. We have relationships with equipment manufacturers where we're getting in the ballpark of 40% discount on equipment that we pass directly to our franchisee. It ends up equating to your first 5 years in royalties are covered through that discount of what you would pay on your own had you gone as an individual. And
That's
so
amazing. So you guys don't take any rebate on the equipment
not
purchase?
today. I think at some point that might make sense for us to do or to explore doing. But right now we're saying we need to make sure that the first priority is that every single franchise partner is successful and that we're doing everything.
Yeah, that they're making money fast, ideally, and then they
Yeah.
reinvest.
And so once
We've seen it where a lot of franchisors like have the option to have the rebate in place. And like if the franchisor has a full-time guy is paying 100K a year just negotiating contracts, it could make sense to at least recoup that cost for the person negotiating. But that's nice that you're passing on right now the full savings onto the franchisees.
Yeah, I think that could change over time. I think as part of us are the mindset of do things that don't scale, do the things that really champion and put the customer first. And then as we get more data and understand exactly the different revenue streams, how quickly they ramp, how, what royalty revenue looks like over X scenarios, then we can adjust and modify and, add a rebate or not from there.
Is there some like other industry or business and that you've looked in that's been revolutionized by technology, whether it's through franchising, license, or kind of corporate locations that have drawn inspiration to you and your partner?
Yeah, so a big one that's really taking off right now, I guess there's kind of two categories, but one of them being, this is the most analogous, is car washes. I mean, you're seeing a ton of car wash roll up and franchising right now, International Car Wash Group, Magnolia Car Wash. I mean, there's a ton of them popping up. And I think it's very similar. It's water, it's a lot of utilities, water, electricity. So for the most part, a fairly passive business if you're not doing, the add-on services like we are with 2U or car washes might be doing with, straight to your home or, other detailing services that are outside of just the standard car wash. But I think car wash is very analogous right now. You're seeing it just blow up. Private equity's loving it. A lot of franchisees flocking to it. And then dog bars and dog parks, I think, is another one where, and that more represents the 2U side, but it's affordable luxury. People care a lot about their dogs. They want somewhere to go. And there's a big service component, unique real estate that you need. And so we look to that industry and that model as well to see if there's anything that we can learn from it.
Very cool. Yeah, it seems like car wash, there's probably some lessons learned. And for prospective franchisees, it's a little nicer, the laundromat, just because of the entry level, where our car wash, you're generally owning also the land, and it's like 3 to 7 mil from what I understand for some of these opportunities.
And I think we'll start getting more investors and franchise partners that buy the land as well. Right now, of our 27 franchisees, I think there's 2 or 3 that are looking to buy the real estate, but 20 of them that said on their second one, that's their plan. The first one, they just wanted to get into it. A lease is faster. They want to get up and running and they get their first one going, and then they'll buy the land on their second one.
And what's like the ideal square footage for a LaundroLab?
Yep. So typically laundromats are 1,500 to 2,500 square feet. They're small, hole in the wall, not a lot of room to even stand while you're in there, let alone sit while you're waiting. And so our first corporate store is 6,500 square feet. It's 2 to 3 times the size of your typical laundromat. And so we're pushing for larger, 4,000 plus square feet. That doesn't necessarily have to be the 6,500 that our first one is, but 4,000 plus, make sure there's plenty of room for customers, machines, but then also the 2U business if you want to do that processing volume.
Do you have a specific demographic where it's like you want to have a zip code that the average family has $40,000 in income, $50,000 in income? Because right now it seems like a lot of laundromats are not in the best neighborhood, or not in the best block, which can be nice in terms of a cost savings for the lease, or if you're going to own the property as well.
Yeah, so on the LaundroLab side, it typically is lower income demographic, less than 50K household income, high density of apartments that don't have washer and dryers in unit, but it's a room in the basement with 4 washers and 4 dryers for the 300 doors that are there. And it's just, it's a nightmare for that customer. So we're looking for areas like that, Class C, Class D property. So it is a lot cheaper, good real estate opportunities. And thankfully, we've been fortunate to work with an investor that is coming into our business here shortly, who has a team of 100 people. They do incredibly rigorous data science for site selection, nice. And they've mapped the whole country. So we know how many LaundroLabs could work in Houston, Dallas, Charlotte, Charleston, Atlanta, all these cities. We now know how much inventory we have based on available penetration through demographic data and data science.
Yeah, it seems like the key. And I imagine you don't have to necessarily have like the best location, like where it's super visible, because once the customer knows, or they have a friend tell them, then they can go to the LaundroLab location. So you don't have to pay, a premium for being like on a corner lot.
No, parking is really the most important thing, because again, people are there for 90 minutes across multiple loads and dryers, and so you really do need a lot of parking. And so we have a mixture of inline stores, but also end cap, out parcel, and the ones that are out parcel standalone do ramp and perform better over time, versus inline is cheaper, but you won't ramp as quickly.
And what's the process in terms of getting started? So you sign a franchise, you go through the discovery process. Later on, both sides are comfortable. They evaluate you, vice versa. Signing the franchise agreement, how long does it take to get open in a typical market? I know Charlotte's probably going to be a lot different than LA or Miami for permitting and everything, but what's like kind of a typical timeline?
Yep. So right now, we're looking at like 14 months from the moment you sign your franchise agreement to the moment you have your first customer, use a machine and generate revenue. Most of that's in the site selection and permitting process. Once we get site selected, a lease negotiated, it's three months, 4 months tops to build the whole location out. It's really the site selection process we're very slow and thoughtful about, because this is such a less so than a quick service restaurant, but it is such a site-driven business that you need to be in the right neighborhoods that aren't gentrifying too fast, that have a high density of the right population. And you can't move. It's not cheap to move this equipment, so you have to get it right. Yeah. And once it's there, there's not a lot. I mean, there's a degree of stuff that we can do on the marketing side to attract people to it, but a lot of it is, once it's there, people are it's in their community, it's in their backyard, and marketing can't make up for a D site. So we need at least a B plus site. And so we're very thoughtful and slow and methodical about where we build these locations.
I like it. And in terms of KPIs for franchisees to focus on, like, is there a metric in terms of like the number of customers they have to have daily or weekly? Like, what are you like, hey, you need to hit this metric and then you'll break even, and then you hit this metric and you're making good money? Is there like a couple numbers that are really important to the success of the franchisee's business?
Yep. So 2 things that we look at that are pretty specific to the laundromat industry is turns per day. So let's say you've got 100 machines in there. You want, on average, those machines turning at least 3 times a day. Three turns per day should get you to break even, or a pretty good laundromat. 4 or 5 plus is a phenomenal laundromat, high margin, high revenues. Our store, for example, did 6.7 or so turns per day. It's one of it does incredibly well. And so we look at turns per day and then open hour utilization. And so if, of the available hours across all machines, if there's 100, we're looking for 15 to 20, 25% utilization, which seems low, but for the industry is incredibly high.
And what are the hours? Like what hours should a franchisee be open?
So we do 7 to 11, and there's multiple schools of thought. A lot of laundromats are 24/7, but our thought is that
Yeah.
nothing good happens after 11, and 7 to 11 is plenty of time for people to come in, whether it's before work, after work, to use the equipment.
So, Alex, do you have any closing thoughts for prospective franchisees or even at franchise findings? We have a lot of current franchisees that might be looking to invest in a second or third concept.
Yeah, absolutely. I think as we've honed, further and further into the model, we've realized that there's a lot of attractive aspects to what we're doing. The tax benefits and tax haven through the equipment depreciation. If it's an operator that purely wants to run a fairly passive business and just a laundromat, you could build 3 or 4 of these in a market, have one GM that can manage all 4 of those locations for you, the real estate piece, et cetera. But then there's this other group that we've started to attract that does have a lot of past operating experience. We've got a 57 unit McDonald's owner, we've got a 13 unit McDonald's owner, 11 unit Planet Fitness. A lot of existing multi-unit franchisees and other brands are starting to get attracted to what we're doing because of there's no inventory, there's the equipment piece, there's it's relatively simple and it's recession resistant. And so, and I asked Clint, one of our McDonald's franchisees, if I could quote this, as I tell our story, but he said, "I'm better off building 3 of these than one McDonald's because it's cheaper and the end cash flow is higher, and I don't have 40 employees and a bunch of inventory." And I was like, "All right, can you put that on like a billboard for us and let us use it?" But I mean, he summed it up really well. As again, no inventory, low labor, tax depreciation, and so there's a number of benefits that we're starting to hone in and build personas around. So long-winded way to get to, we're looking for good operators that have past operational experience, whether that's in franchising or not. What we're starting to shy away from is this being a first-time business or a corporate executive that this might be their first foray. We have a lot of that. We welcome it now, but we're starting to realize the really good operators are the ones that have some of that existing experience already.
Have done it before. They're probably going to hit the ground running a lot faster.
Yep, and they have teams in place already too, where it's like I've got a GM of my Planet Fitnesses who's going to build a team out underneath him to run the LaundroLabs, and so there's already this built-in infrastructure that comes with them that's really valuable too.
And compared to the gym space, like we've seen Planet Fitness stock, it went up a bit, but it's been kind of flat, at least for the last few years. And there's just a lot of competition with technology and with consumers being less likely to sign up for a whole year membership and wanting to have things more on demand or month to month, which hurts a lot of these models that are reliant on the consumer only showing up, for a few days out of the year. So I can imagine for the industry that you play in, like there could be technology changes, but people still need to wash their clothes, and we're hundreds of years away from like having some like, I guess, non-water based, non-machine kind of way to clean clothes.
Right.
That's not so costly.
Right. And even that, like I saw someone sent me a video the other week of a folding robot, and people have spent hundreds of millions of dollars at this point trying to figure it out because everyone hates folding and everyone's got to do it. And this robot takes this shirt and it takes 3 minutes for it to fold one shirt. And again, it'll get better and faster over time, but our consumer is going to pay $600 to $1,000 for this machine. Maybe someday. And again, there's still a group that can't though afford that, and they're going to have to go to a laundromat. That's where again I like the diversification of what we're doing. Is you got the low end customer that's always going to have to use it, and you got the more affluent customer that if they have the disposable income and they don't want to do it, they're going to pay someone to do it, and why not pay us to do it?
Yeah, Alex, I love the industry. I love the work that you and your partners are doing. We'll be sure to include a link to your website for anyone that's interested in a LaundroLab franchise. And thanks again for joining today.
Yeah, absolutely. Thanks for having me on, Patrick.